The mindset needs to be, I've got these goals I want to look at on a regular basis. And it comes back to that mirror. You talk about also the reticular activating system, that what you get in your mind is what you're going to see and focus on. Your energy is going to go where your focus goes. And one of the big things is focus on these things of like, oh, the market's bad, lending's hard, capital raising's hard. Well, if you sit there and you kind of ruminate on that, you're going to move that direction. You say, hey, there's challenges. Let's look at what's right in front of us. What can we change? And let's change that thing. Let's focus on that little small step and move forward.
Welcome to Elevate, the masterclass where we dissect the elements of exceptional achievement and lifestyle design with a focus on personal growth and real estate investing. Now, here's your host, Tyler Chesser.
Elevate Nation, welcome back. This is Tyler Chesser. I'm so thankful to have you here, and I'm blessed and grateful to be sitting with Nic Espanet today on Elevate. And in today's episode, you are going to learn the foundation of a growth mindset and how that can help you scale as a real estate investor, as an entrepreneur, as a leader, as a father, as a mother, as a person that cares about other people, as a person that is challenging yourself to live life at the highest level and become the greatest version of yourself, because that person does exist. And also what you're going to learn today are some tactics, some strategies, some tools on how you can solve problems in your business and your real estate portfolio today. Also, how you can put your portfolio in a position of optimal performance. There's a lot of tools, tactics, and strategies that we talk about in today's episode. So I want to encourage you to buckle up and get ready to take notes, because there's many distinctions from today's episode. Welcome to Elevate Podcast. Elevate Podcast is all about mindset, mind expansion, and personal development for high-performing real estate investors. I'm your host, Tyler Chesser, and I'm a professional real estate investor and entrepreneur. It is my job to decode the stories, habits, and multifaceted expertise of world-class investors and other experts to help you elevate your performance and lifestyle. Are you ready to take it to another level? It is time. Let's raise the bar today. And guess what? What does raising the bar mean? It means go higher. It means try harder. It means think bigger. And by the way, that's where it starts. It starts in your mind. It starts in your beliefs. It starts in the way that you're striving for something big. And you know what? It feels a little bit uncomfortable. It feels uncomfortable to think, well, wait a minute, I already jumped that high. You're telling me you got to raise the bar again? Well, yes, there's always another level. You're going to learn that today, that there's always another level. And there is another level for you to reach today. So I want to encourage you to think bigger. Let's set the intention today that we are going to expand. We are going to elevate. I want to invite you to pay the fee. The fee is to pay it forward and share this episode with one person. All you have to do is grab the link, send it in a text message, email, post it on social media, tag myself, tag the podcast, tag your friend who it is that you know would benefit from the realization that everything can change when you shift your perspective from fixed to growth mindset. And that's the foundation to expansion within real estate, within your money, within your lifestyle, within your dreams. And once you make that shift, everything can change. But I want to encourage you to think about, who is it in your circle that would really benefit from hearing this conversation? Who is it that may really benefit from understanding, you know what, that middle-class scarcity perspective versus the abundance mindset, or the abundance wealthy mindset? What an amazing shift that could make for them. So please, pay it forward and pay the fee for this episode. Also, give us a rating, review, and subscribe or follow Elevate Podcast and wherever it is that you listen or watch podcasts, because you know what? We can't do this without you, and your feedback and your endorsement for others is so, so important. So I just want to ask you from the bottom of my heart, if you have not done that yet, I want to thank you for doing that. And I want to invite you to do that now. Please do that. And also, I just want to thank you for listening. I want to thank you for being here, because, you are the reason why we do this. We're here to pour into your cup. We're here to help you expand your horizons, to gain the appropriate insight, to make, the appropriate shifts in your business, not only in your strategy, your application, your team, your structure, your tools, your systems, but also in the way that you interact with problems, in the way that you access the infinite resourcefulness and creativity within you. So if it's your first time listening today, thank you and welcome to Elevate Podcasts. We are here to pour into your cup. And by the way, there's 290 plus other episodes that you can dive into immediately And when I tell you that we bring the heat every single time, if you've been here before, welcome back. With all that said, let's dive in. I want to introduce you to Nic Espanet, who is the founder and principal of Thrive Multifamily. And he's got a tremendous profile in years of experience. He's got almost 7 years of experience in multifamily real estate, 10 years of experience as a small business owner, and 24 years experience managing physical therapy teams. So you're going to hear about how he leveraged his background, in going to school and getting good grades and getting a good job and make a tremendous shift in his late 30s to living a financially abundant life that we've all found through real estate investing. So without further ado, please enjoy this conversation with Nic Espanet. Nic Espanet, welcome to Elevate, my friend. How you doing?
Hey, doing great, Tyler. Thanks for having me. I'm excited to chat with you today.
My pleasure. No, very excited about our conversation and really diving into your story, diving into what you're up to today in the real estate market and really leveraging your experience, which is going to be, I think, very relatable to many of our listeners. So let's start there. Let's talk a little bit about your upbringing, your backstory, because I always like for listeners to really understand who exactly we're talking to before we really dive into tactics and tools and strategies and expansion. But let's start there with your upbringing and your backstory.
Great. I grew up middle-class family, working parent, blue-collar working parents with, the mindset that I was the first one of my family to have a college degree. So, but it was that do well in school, go to college and get a good job, but also a little bit of the blue-collar mindset of, wealthy people get it from taking from others, more of not the abundance mindset. But, like a lot of people, I read Rich Dad, Poor Dad at one point, and that really shifted my mindset on how we should treat money and how money works. So that got me, just exploring different avenues. I mean, that was probably in my late 30s. It took me a while to finally realize that. I was in the rat race of, I went to school, got a degree in master's degree in physical therapy. It's a great profession, but it also, it is a little bit physical, unless you get into the business side. I started thinking, when I'm 60, is this what I want to be doing, or even 50? And so started pursuing other avenues, mostly just looking at what I wanted to do for retirement. But then that's how I got into real estate investment. But Rich Dad, Poor Dad really changed my mindset on how, we can get money to work for us instead of working for it and making someone else wealthy.
Yeah, let's start there because, man, that is so relatable to so many people, really, that middle-class background and the scarcity mindset, which is almost the underlying factor that most of us are not aware of. We're not conscious of that sort of belief system that really is an underlying mechanism of many of the driving behaviors or decisions that really kind of surrounds that culture. So, I mean, when you started to realize that shift, which was when you look back, it may seem simple, but, in that moment, it is absolutely profound. It almost changes everything, changes the way that you look at everything from scarcity to abundance. So when you became aware of this line of thinking that, money is not limited, opportunities are not limited, there are ways that you can structure your life. There are ways that you can design the way that you make an impact towards other people, the way that you leverage your resources. What happened for you? I mean, were you first kind of thinking, man, I feel like I'm behind, because you were talking about being in your late 30s, or, what kind of went through your mind when you started to kind of unlearn everything that you had known for so long?
Definitely. First thought was like, oh crap, I'm so far behind. If I'd have started this when I was 18, but that was brief. I think I don't know if it's natural. I've always looked at a more positive, and I think it said it says things happen for you, not to you. And I think a lot of the middle class or scarcity mindset is like, oh, this bad luck happened, so I'm not going to pursue. And I've got to the point now where I don't believe in luck. I mean, to me, luck is when preparation meets opportunity, or when lack of preparation or stupid decisions come to fruition. So you make your good or bad luck 99% of the time. Luck is how a football might bounce if it's fumbled. That can go a weird way. But so after a short while, I'm like, I've got to get more education. So it started, at least since my 20s, been a pretty ferocious reader. I quit reading fiction books probably in the last 10 years, I've read 2 or 3 fiction books, but just sometimes I just need to unplug of something that's not brainy at all. But started reading different, just going down different rabbit holes of self-improvement book, mindset books, anything like that can, that would just help me. And then that started out down the path of thinking I was going to do single family. investments, but came across 2 or 3 different references to multifamily and ended up that's where I started. Was with my first real estate investment was I passively invested in a 70-something unit, but the first one that I syndicated was a 100-unit property.
I love that. I love that. So you were able to really take quick, massive action as you started to make these shifts in terms of the way that you looked at the world. But going back to sort of the upbringing, the backstory, and leading into a career of being a physical therapist, a small business owner. I mean, obviously, with 17 years of experience as a small business owner, 24 years managing physical therapy teams, you had a background that you could leverage into this new mindset and this new approach of not only your financial resources and your financial freedom, thinking about that leverage and that experience. I mean, talk to me about how you were able to utilize your experience and actually allow that sort of, the concept that you shared about, hey, life happens for me, not to me, right? And so to be grateful for that experience and then to leverage that into your future. Talk to me about how you did that.
No, great. And it's not, having the teams that oversaw, but a lot of it was dealing with patients, the clients we were dealing with, because it's somebody that's injured that often doesn't want to move their joint or limb or get up and walk. So you have to work on their mindset of getting them to move when they don't want to. And so having that experience of dealing with people on that level, I think was even more valuable than managing the teams of physical therapy assistants and that were under me as employees or assistants, was dealing with the patients, just working on their mindset of, hey, yes, you broke your thigh or femur or humerus or whatever, you broke something or you injured something, it's going to take pushing through a little pain to get it better. We've got to break it down some to build it back up. So, dealing with people on that level, I think that was beneficial. And I learned a lot on how to interact with people through trying times. And being a real estate syndicator, it's up and down like this and, capital markets and things like that, there are times where you're like, oh, this sucks. But, you kind of look at everything and, what can we fix? What's in front of us? What can we change or alter now? And let's get those small steps, and then we can start taking bigger steps to make overall improvement.
I love that. And by the way, I just wanted to point out, there's such a massive difference in a solutions-focused mindset and a problems-oriented mindset. Because when we look at problems, we find more problems. When we look for solutions, we find infinite resourcefulness and creativity within us. And by the way, that's the foundation. And that's really why we're focusing so much on mindset, mind expansion, and personal development in this space. Because if you want to grow as an investor, your success is a lagging indicator of how you're investing in yourself and how you are shifting your mindset and where your focus is going. Because by the way, where focus goes, energy flows. So let's focus on the solutions. And then, so as I'm thinking about your story, you were able to take massive action as you shifted your perspective on really everything from scarcity to abundance, and from how middle-class people think about money and how wealthy families have thought about money for generations. And it's a total shift. And when you make that shift, everything changes. And so as you started to take massive action, talk to me about your growth from there. You syndicated a 100-unit deal. How long was it until the deal after that?
The first deal was, it was 10 months. So my first deal was in February of 18. And the second was December of 18, 124 unit with the same 2 partners. And we brought in a 4th partner and closed a 224 unit deal in August. And now just closed my 8th deal late November of this year. And it was a 168 unit deal in Arlington. So, it's amazing. At times I wish I'd gone faster. We only did 1 deal in 22, but with the lending and, sometimes you don't necessarily just want to put check marks up on the wall. You want to make sure they're deals that work. 2021, I was part of 3 deals. So it's the market fluctuates. So, it's come across. So it's, I'm over 1,300 units total that I've co-syndicated on. And then my wife and I are passively invested in another 1,400 units with other people's deals.
It's still remarkable growth. And to your point, no deal is better than a bad deal. At the end of the day, that's our big philosophy is, we look at hundreds of deals before really one will make sense. And still what you're talking about is really remarkable growth. And obviously that comes down to massive action, but it also comes down to, effective strategy implementation. And so I'd love to really talk about Thrive Multifamily and how are you growing today in today's market environment, not only your business, but your portfolio? I mean, talk to me a little bit about sort of your outlook today and how you're growing in today's market.
So one of my big focuses in 23 is being more present in front of my investor pool, is getting out, sending out drip campaigns, just informational stuff monthly. And then, so that's something I'm really focused on, keeping them warm, when there's not a deal. And then we are underwriting deals. There's not much deal flow currently. And, as we're doing this podcast, and I think it's going to start picking back up. So, that goal is to ask deals that are in, we have a few target markets, in a range and an age that we're looking at, that when those come out, we are underwriting them and seeing if the numbers work, seeing where the lending is. It's considering different lending options. Is it a floating rate now, or rates going to be coming back down as we've been going up for a long period, or, getting in a fixed rate deal, but that has challenges with your exit or yield maintenance fees could be higher. We don't know where those are going to be at that point. So, trying to navigate what type of loan terms and what works best on a particular, or, I think assumptions right now are attractive. If you can find a low fixed rate loan that somebody else has started and then take over, would be a nice option. But, if everything went perfectly as planned, which it won't, but hopefully it's close, I'd do 3 to 4 deals in 2023 in that, 100 to 200 unit range.
And do you focus exclusively on Texas?
All my deals are in Texas. I would, if I found somebody that I felt would be a good partner in Florida, I would consider doing something in Florida, and maybe even other areas. Tennessee has been well, but I live in the middle of Texas, so it's, it's a great market. So it's hard when I can drive. Even I had properties in Houston. That's being in Fort Worth. It's still easier to drive to Houston than drive to Dallas, go to Love Field. It's about the same timeline. And I can listen to an audiobook or a podcast easier driving, use that time instead of shuffling through an airport. But it's hard to leave Texas when, I drove to a property yesterday to take some pictures of some stuff we're having done. It's a 30-minute drive. It's like, I could get over there, spend 15 minutes and drive home. Whereas I don't have any plane rides. So, but I don't want to let that limit me. There are markets I would expand into, but I'm not actively looking there just because I have so much right here in our backyard.
Yeah, I mean, there's so much value in being in market. I mean, there's the thing about real estate is you can really employ thousands of different strategies to get to your outcome. And so, a lot of times you can either look at it and say, live where you want to live and invest where the numbers make sense. Or if the numbers make sense in your backyard and you have the boots on the ground to be able to source those deals, that can be a huge and amazing strategy. And so talk to me a little bit about your deal sourcing strategy. I mean, how are you coming across deals? There could be some in the traditional sense and the non-traditional sense. So talk to me a little bit about how you are sourcing opportunities in today's market.
Traditionally, I do look at emails that come out, but a lot of it is just having built relationships with brokers, having been part of 8 syndications. We have the relationships of the brokers that we bought stuff through, and we're looking at some of our deals that are coming full cycle. They're starting to list those. We've listed one. We're looking at BOVs. We're currently holding off until the lending. We don't have to sell them. We're going to wait, see if the lending gets a little more favorable towards the end of the year. It may help us sell at sell at a better price at that point. But I think the relationships with the brokers are probably the most important thing, because you may not. I mean, I don't. It's rare that you get a true off market where you're the only one looking at it. But if you can be the first 4 or 5 people that look at it before it goes out to mass market, and it's a deal, you may be bidding against 4 other people instead of 40 other people that will push the price up. And it's usually going to be other more sophisticated buyers who are going to make reasonable offers, not somebody that's newer and may just be coming out of left field with a really high offer that we couldn't match.
Now let's shift gears and talk a little bit about strengthening the portfolio, because obviously growth in terms of acquisitions is only one side of the business, of course. I mean, that's where really everything starts, is when you make an acquisition and when you bring a new deal under management, then it's about execution. Talk to me about execution on your side, and really what I'd like to focus on is how are you strengthening your portfolio now? Because in some senses, this is still a great market. In many senses as well, there's a lot of challenges out there. So talk to me a little bit about how you are strengthening your portfolio to weather economic storms, to weather market conditions, to overcome challenges.
Great question. So one thing is, personally or on a business Thrive level, we are looking at outsourcing some of the stuff, the marketing, the more admin tasks that I've taken care of in the past, so we can focus more on the money parts. But I think right now, holding on to a little more capital, just because, to see what's going to happen. It's, investors may not like a little bit smaller returns, distributions, but, if we can explain, say, look, we're holding back some of this just because these change, we're seeing these possibilities in the market, and we'd rather have this money that's yours in the bank and then not need it, and we give it to you in a year or at some point in the future than us distribute everything out. And then there's some changes in the market, our occupancy drops, collections drop, something like that, just in the uncertainty right now, and we have to ask you for more money, or the partnership has to loan money, which is going to be expensive too if we have to loan. So it's better to say, look, it's yours. It's sitting here in the bank. It's only here for an emergency. And we do try to keep, whereas before COVID, we would hold on to about 30 days expenses. I like seeing 2 to 3 months there, just because, that first 4 weeks of COVID, when we didn't really know what was going on, 2 to 4 weeks, like, man, I wish we had more money. Because if we have to go 6 or 12 months with eviction moratoriums, tenants not having to pay, at the time, the options to take some type of relief from the lender were not, they were pretty punitive if you had to do it. So we were like, no, only if we're in dire straits, because, it's just, even paying that back would have been hard. So thank goodness it wasn't near as bad as we had feared. But, the first couple of weeks, you're like, oh my goodness, I sure wish I had more cash set back.
Yeah, I love that. Yeah, reserves are so critical to be paying attention to in terms of weathering storms and just, sort of anticipating the unexpected. And I love that dialogue between your partners to say, hey guys, we want to put the investment in the best position to succeed no matter what. So here's the plan, and, trying to be more conservative along those lines. How else are you strengthening the portfolio right now, whether it's from sort of a hedging sort of against issues or challenges that may be unforeseen, or just literally within the operations of your assets? Is there anything else that you would point to?
We are definitely watching the expenses. This challenging time with labor, we've had to crank up our payroll well above what we budgeted on anything we bought. Other than this most recent property, I think payroll now needs to be $1,400 a unit, roughly on a BC property. We were underwriting $1,000 to $1,100 a unit. So we've had to come in, and that's in explaining that to our investors. Like, yes, we can hire people at $1,000, $1,100 a unit. One, they're probably not going to be very good, and two, they're not going to be around because somebody else is going to pay them more. So we are having to blow our budget up, not blow it up, but really push our budget on payroll. And so we made a conscious decision that it's well worth it to spend more money on good full-time employees and staff. That's something I think one of the biggest shifts we had is, we've had to replace a couple of property management companies at different assets. And the biggest problem was turnover. And we saw with the turnover, we were losing tremendous amount of money because when you don't have a consistent manager or maintenance staff, you're not getting units leased. You have vacancy where you're not collecting money. It's opportunity lost. We can come in and pay somebody $10,000 or $15,000 more a year, which is $1,000, $2,000, $1,500 a month. It ends up being a drop in the bucket compared if we have somebody good that's getting units leased and keeping our occupancy in mid to 90s is so much more worth it to pay, and not have them hired away from you for $1 more an hour or something like that.
Absolutely.
So keeping an eye on that, watching KPIs, delinquency, how are we pushing with some of the changes in the law? In Texas, we used to be able to evict much quicker, and we've got a 30-day, they have to have 30-day notice. So no matter what, somebody's going to owe us 2 months rent before we can get them out. So making sure the staff is starting the process on the first day they can instead of dragging that out. And then it ends up into another month. Watching things, I like to check it once a month. Are all our people that are off a lease, have they been pushed up to full market rent, and are they paying their month-to-month fees? These are other things that we can make sure they don't drop by the wayside.
I love that. And one thing I just wanted to add to some of the comments around the labor market is that, in this business, it's very difficult, if not impossible, to cut your way towards prosperity. And so you've got to have the right people on site, and you've got to pay attention to market forces there. At the end of the day, yes, you can pay below market, but you're going to get much more below market sort of quality and outcomes. And ultimately, in many regards, that's going to lead to higher expenses. in many aspects. So I think it is important
and
to recognize.
lower income. You're going to miss. I mean, if you're at 85% versus 95%, you're missing a lot of income. You'll never, when that the clock ticks or the calendar ticks to the next day, that day's rent's gone, never to be captured again.
Absolutely. Hey guys, I want to remind you to check out CF Capital. CF Capital is the premier boutique real estate investment firm in the Midwest and Southeast region of the United States. We are a national real estate investment firm with a purpose. We provide property investment and asset management solutions to help passive investors maximize returns on high-value multifamily communities. But our investments go far beyond acquisitions. We invest in people. We are in the business of elevating communities and raising the bar for everyone within our ecosystem. CF Capital is a real estate investment firm focused on the acquisition and operation of multifamily assets. We confidently deliver tax-advantaged, stable cash flow and capital appreciation with a margin of safety. By investing alongside our team, investors can preserve and grow their wealth without having to deal with tenants, termites, or toilets. Investors come and stay for the outsized returns we create in our deals while appreciating the ancillary opportunity to make a bigger impact that only CF Capital can provide. If you're an investor and want to invest with us, here's how. Learn more about CF Capital at cfcapllc.com or by simply clicking the link in the show notes of this episode. We will see you on the inside of this powerful community, so let's elevate communities together. And a couple other things I wanted to follow up on. You mentioned migrating property management companies in the past. I mean, talk to me about some of the decision-making factors there and maybe give us a little hint in terms of the experience that you had in terms of those transitions. I mean, the good, the bad, the ugly. I mean,
sure.
Help me understand sort of what you've experienced in that realm.
The biggest challenge I've seen when we've had to make changes was the biggest problem was staff, keeping consistent staff. It wasn't quite this bad, but I said we have a manager a month. If you have a different person coming in there, you got 1 to 2 weeks of even if they're an experienced manager, they need to learn the property, and then they're leaving in 4 to 6 weeks. They barely even they can't get any systems going, can't get communicating. So even your not only your occupancy, but your collections, if they're having to go out and collect, especially as through COVID, we trained some tenants that they don't have to pay on time. It's easier to, they can drag it out. They're not going to be evicted as easily. So you've got to be proactive on collecting rent, knocking on doors, sending messages, and setting the mindset. So, when we moved our first one, really the second time, I talked to the partner, said, what, if we could go back 6 months, what would we do different? And to a person, we all said we should have made the change sooner. We gave them too much time trying to fix the problem. And the new company came in and did great. I'm like, we could have been 2 months at this, 2 months sooner, we could have had this happen. And so that's probably number one is if you're starting to get that gut feeling or that spider sense, you maybe set a 30-day goal. And if they're not making significant progress, make the change. And once you start feeling it, go ahead and reach out to who you might replace. Even though, you're not binding by talking to them, but go ahead and start the conversation with a couple of other management companies that could step in for you. And, our first learning experience is our first property was in Abilene, Texas, which is about 2 hours west of DFW. We took a management company that did not have a footprint there. And that was a big challenge because they had trouble hiring. They didn't know contractors. So we have set a goal that we will not take a property management company unless they have 2 to 3 other properties already in the market, just so they already have a network. And they can, if you have somebody out sick, they can float somebody over to you. If you're solo, it's the only one in town, they just don't have the network or the team to help out.
And, when you have that gut feeling or that spidey sense that things aren't working out, I can understand the internal dialogue, whether it's in your own mind or with your partners, that but let's just try to see this through. Let's try to work through this, because if we make a transition, we're going to take 2 steps back before we take 3 steps forward in a lagging sort of, capacity, because it takes time to build that momentum. So I can understand why maybe looking back, you would have said, hey, let's do this sooner, maybe why you didn't do that. But what was it initially? Was it just the constant turnover of staff, or was there something else that, looking back, it's like, what, this was obvious. We should have made this decision sooner.
Constant turnover staff, which led to our occupancy just slowly going down, not seeing new leases signed. I generally will let the staff know when I'm coming to a property, but I also like to just drive. And one of the big marks or measurements is the property clean? Because that's the first thing any prospective tenant's going to see. But, we drive up to properties, and I wouldn't show up at 8:00 on a Monday morning. If it was Monday, I'd wait till lunchtime or so. But showing up and there's trash everywhere, I started carrying that one company before we get them replaced. I'd carry a package of kitchen trash bags in my truck, and I would pick up trash, put it all together, and take a picture and send to the regional and say, "This is what I picked up this morning on our property." And that was, things like that. That was indicated. But the biggest is seeing that they're not getting collections, so your delinquency's ticking up. Because if you all of a sudden a new manager comes in, she's got to figure out what notes are going on. Apartment 123 hasn't paid, but they said they're going to pay on this day. They're starting from scratch with all that. And then as occupancy was just slowly going down, and if you wait till you're at 88 or 87, it's a big ship that's already moving in that direction, and you're probably going to go to the low 80s before you get it turned around, or you need to cut rent. And that comes back to not having staff, because look, we're dropping. Let's do a couple of units at Brock. Yes, we may lose money on it, but right now we're getting zero for those units. And then another thing that we were challenged with is I would pull up the availability report, and we had a lot of units that had been vacant for a long time, and they weren't ready. To me, if a unit's not ready, it's stabilized. I mean, you should be a bad unit should be 7 to 10 days. If it has some stuff in it, a good unit should be made ready in 3 to 5 at the most, probably less than that. But so that is another report I'll look at, is availability report, and see if we have units that are more than 2 weeks and are not ready. Like what's going on with this unit? Was it in bad shape and we need some materials ordered for it, or is it a staffing issue? Is what's going on there? So that was another measurement that property dipped into the 70s, the one that was doing the worst, which, before we fired them, I was out trashing unit. You can't do this this was a 124 unit property. I trashed some units. I was like, and I went and walked every vacant. I took over project managed till we get the new company on, and walked every vacant unit and took really solid notes, and then rated them like easy at the top, or really horrible ones are at the bottom. Let's start knocking off the easy base hits we can get here and get those done. And then we'll worry about these bad ones when we get all these easy ones cleaned up. And I've thought of something you talked about, in the moment when we're looking to change. I think with a growth mindset, you see a problem like, man, we got to fix it. We got to fix it. And sometimes we get in that mindset, we don't want to look at, we may need to pivot and go a different direction, because we're being driven. We want to keep plowing ahead and get something fixed, whereas sometimes we might need to make a turn to get there.
I agree, man. And one thing I'll say too, just to add to the conversation, is that these are like cruise ships, cruise liners. I mean, it takes a long time to turn in a different direction. Like if we're going in a negative direction, to be able to go positive, it takes substantial amount of resources, effort, and momentum, and it takes time. And so to your point about all of these different things, I mean, all of these different factors, whether it's make readies, staff, whether it's, really getting clear in terms of what is not happening to get us to the occupancy level, to the performance level that we have set forth. I mean, it takes a lot of resources. And so if you were to kind of look back as well and say, all right, well, were there any indicators of the management company that just didn't work out, other than, hey, maybe their lack of, activity in the marketplace? Are there any other factors that you could have identified prior to engaging with them that may have put you in a position to be successful and not have to make a transition?
As we've interviewed what I've learned is, do they have a presence? Talk to some of the people at those other properties. How long has the staff been at those properties? Like our Abilene properties, when we switched to the company, they had 3 or 4 other properties. We talked to that staff, and 80% of the staff had been there for more than 7, 8 years. So that told us a lot about the company. They're doing something to keep people. Now, you may not have that, because some of these apartments turn over quicker, but most of their ownership that's already out there are long-term holders. So that gave us a lot of confidence that they had long-term employees. When I had to do it at one in Houston, that was a smaller company that was that we replaced, that was growing tremendously. Maybe looking at that, because I think sometimes these small, mid-sized companies have a great success, and then everybody property management XYZ is great. All of a sudden, it's a good thing, but they just blow up. I think sometimes they need to turn people away too, That was, I feel like, what happened with our Houston management company is they just exponentially grew, and we only had one asset with them, whereas some others were bringing in portfolios. And understand, we may not have got the most attention. We should have, but if they've got somebody that has 10 times more properties than us, they're probably going to get the first attention, and we're going to come down. It's, they're taking care of the one that has bigger. So I think just having long-term stable employees, regional, what's the regional to property ratio? How many properties is your regional going to be over? And how big is that footprint? They may only have 5 properties, but if it's San Antonio, Houston, and Dallas, then that 5 properties is hard to get to on a regular basis. But if it's 7 or 10, but you're inside the loop of Houston or Dallas, it's easier to make frequent visits.
Really good insight, Nick. And I think the stability factor that you pointed to really comes down to, it almost indicates that there's a positive culture, or a culture of, retaining talent and supporting that talent, giving that talent the resources they need to succeed over the long haul. So there's definitely a lot to be said about that. And then in terms of just the structure and the practicality of that structure, think about that. These are advanced questions that we should be asking prior to engaging in any relationship with a property management company. This is really good stuff. I'd love to kind of switch gears just slightly, but in terms of operations, still on the same thought process, one of the things that's top of mind for many investors right now is insurance, because insurance has really, really shifted over the past couple of years. In particular, we're anticipating some tremendous renewal increases. And so let's talk a little bit about how you're navigating those waters.
So we had 20-ish or high, 20% or higher increases almost across all of our properties. And we were told to expect almost the same next year. It is, underwriting new deals. It's not that, we can underwrite it, and I'm wanting us to plug in. Let's show a 10% insurance even for year 2 and 3. And another thing, we're getting any of these older properties that still have Federal Pacific panels. I've heard of a couple of instances where the insurance, not necessarily the lender, insurance coming and saying, we're going to drop you if you don't replace all these. And you're looking at roughly $1,000 a panel. And that's if you don't have to move them out of the closet because of the city code, which is going to add another $400 or $500. So a tremendous expense. So maybe we're going to go ahead and plan on doing that at the front end. On our recent acquisition, we had it in our budget. We're going to do it over time, but we got notice from our insurance that if we don't get these 52 panels done by March 20th, they're going to drop it. So they gave us about 4 to 5 weeks. Even though we had it, we were starting to get bids, and we didn't think we were under that much of a gun. But now let's go back to our properties we've already owned, and it's going to be communicated with investors and say, look, here's our insurance. Conventional wisdom at the time was 2 to 3% growth per year increase on that, but it has gone astronomically, and it's it's been the freezes. This the last freeze we had in Texas, and right before Christmas. There's one of our properties we're having to file a claim, and I'm sure there's others. That was a property in Houston that had frozen enough to have pipes break, but that's going to add. That was these insurance vendors had already told us we're going to have a 20 to 30% increase next year, and then we had this next freeze. So it's a challenge. And then I'm very hesitant to buy anything in the coastal counties of Texas or even south of I-10 in Houston, because the insurance providers are very nervous about that area. My understanding, there's down to maybe 2 or 3 people that will even carry those, and so there's no competition to them. But you're looking well over $1,000 a unit if you're getting down to and Florida's somewhat of the same way, because almost all of Florida is coastal for the most part, and so it's a challenge. We're looking in DFW $650 to $700 a unit is where we're penciling in to start with, and we're going to add a 20%, 30% increase to 2024 as we're underwriting those. And there may be people that'll come in and not do that and beat us, but we don't want to get caught with a big increase. Now that we know it, the properties we bought 2, 3, 4 years ago, we have to resolve come up with a solution. But if we're buying something now, we need to be planning on a big insurance bump.
Absolutely. And going back to the earlier part of the conversation, the difference is, all right, should we focus on this problem? this problem of, tremendous insurance increases, or should we focus on the solutions? Because there are solutions. We may not have them to have groundbreaking sort of shares on this podcast today, but there are solutions out there, right? There are outcomes that we can sort of figure out as we continue to work through these issues. And so that really is where the mindset comes into play, and the collective mindset of your partners and your team, because ultimately there is a solution for every problem, including this one.
Sure.
One thing I'd love to talk to you about are, before we talk about sort of how you're investing in yourself and how you're continuing to condition your mind for success, talk to me a little bit about some tools, some systems, processes, or things that you've adapted or adopted within your business over the past few years that have been most impactful for your continued growth, that are allowing you to scale the way you are.
And online Monday.com has been great to track things, keep order. I try to keep a fairly consistent, generally, my morning, I can't recall who I got this from, but try to set aside, I know it's Jesse Itzler, I heard talk about this, have the morning for you, or set a time. It doesn't have to be morning, but morning's best, because the further you go in the day, something's going to get in the way. But he said, what would you do if you were just insanely rich, didn't have to work? List some things, 10 things that you really are important to you, like hanging out with your kids, doing something spiritually, working out, things like that. Now pick 2 or 3 of them and make sure you do those before 9 o'clock or 8 o'clock. Pick a time in the morning to get those. So I've really tried to focus on that for a personal growth level. Now, and then business-wise, it's just, we have set up a list of KPIs that we check weekly, 2 or 3 times a week, and then some that we do monthly, and try to and then I have that set up on Monday.com to remind me. And that's probably one of the biggest help, just setting reminders. Because if you start getting enough of them, and we're starting to look at, like I talked about earlier, outsourcing some of the admin stuff, be to a VA or somebody, an assistant. And that's something I wish I would have started earlier, but, we didn't. So we're looking at getting that going now, because, I've realized that I spend a lot of time on admin stuff that I don't need to be doing. But I also have the mindset of, I guess, a type A, I don't know what you call it, but if I don't do it, it's not going to get done right, or, I just had this conversation with a partner this morning. I'm like, I can get all this done in as much time as I'm going to have to train somebody to get it done, and maybe not get it done right. But what I need to think is I can train them. Yes, it's going to take as much time now, but next year when we need to do this, or 6 months, they're ready to go.
Right. I can understand that mindset. I think many of us have gone through that, because there are disappointments along the way when you find the right leverage, you find new team members, sometimes it doesn't always work out. And so then it comes back on you, and all the training that you put in, then it feels like a sunk cost. It feels like a waste of time. And it feels like it now has taken you twice as long. But the question that I would challenge any of us, who are listening to this conversation would be, is this belief limiting you or serving you? Because in my opinion, that is a limiting belief that is holding you back from attaining greater levels of success, because the right people are out there. You just have to keep looking. And by the way, every single time there is a setback, there's an opportunity for you to rise to the occasion and recognize that you're being tested. Your commitment is being tested. How committed are you to your goals? And so, that is it's a helpful dialogue for us to all kind of put on the table and observe and say, you know what, that's not limiting me anymore. So let me continue forward. Let me show the universe how committed I am to that outcome. One of the things you talked about was recognizing and really keeping sort of your awareness on your KPIs on a weekly basis and even biweekly. Talk to me about what are those KPIs that you're really focused on?
So we mentioned some of them earlier, and obviously occupancy and collections are big ones, but then your delinquency, is that ticking up? Is it up? Is the big thing with delinquency is by the end of the month, is it where it closes? But I like to look, is there anybody that owes more than a month rent? If you're looking at especially C, someone into B, once they get above 1.5, 2 months rent, the odds that they're going to, without somebody coming in and giving them the money, that they're going to scrap and get it back together are slim. And then looking at if they own, is the on-site putting in notes, delinquency notes. I like anybody that's over $500 delinquent. I want to see it at least not monthly, weekly update before our weekly calls. And so delinquency, the month-to-month thing I was talking about, would probably run that. I don't do that every month, but every couple of months, just to make sure. One thing that we try to do quarterly is look at are we paying electricity for any occupied units? Because when the units roll into the electricity rolls into our name, they should be switching that to before they give a key, prove that they have the electricity in their name. Now, our new this is the company we replaced, was bad about it. So I don't check as often because we haven't found it, but it's still something I like to pull up occasionally. I wish I had my report in front of me. So another weekly, the availability report. That's one I like to look at right before. Or some properties we do every 2 weeks, some weekly. I'll pull that up, and if there's something that says time not ready and how long it's been vacant, it's more than 2 weeks, I want to know what's the story with that one. And this is stuff that I need to train an assistant and say, here at this number, you send it over to me. And that's it's a process. And then I have a list of these somewhere. Another quarterly is where we're at on the budget. I do monthly when we get our financials. I'll look at the budget variance and see if anything that's significantly off there. Have they put a note? If not, why are we out of budget on this? And I want them to put monthly. They'll do year to date and month to date on there. I want to see mostly the month. It's important yearly, but what are we doing monthly? Why are we way off on an expense? What caused this? Is this a trend? I will look at on those same ones. What does the T3 look like to the T12? And especially the ones where if we've replaced a property management company, it's nice to see, our T3 is 25% better than and that's mostly on the income side because expenses are so seasonal, but I still look at the expense T3 just to have an idea of where we're trending. I think this
is good stuff, man. Let me just say real quick, what you're describing is a pulse of the portfolio. And one of the natural laws of money is that money loves attention. And what you're talking about is placing your attention on critical matters that are driving results in your business, that are driving return on investment for yourself and your partners. And there are so many great shares there. So appreciate you bringing that up. And I want to talk a little bit about how you're investing in yourself, because as investors are placing capital in deals, placing capital with other partners, and achieving return on investment and, migrating and navigating challenges and getting to the other side of challenging problems and getting to solutions, we've also got to remain consistent in how we're investing in ourselves. So you were talking about the priority in terms of doing things that you would do if you had unlimited resources before 9 a.m. But how else are you investing in yourself? Talk to me a little bit about that.
Sure. I'm in a masterminds that help with mindset. I'm actually missing one right now because of shoulder surgery. So I have a little FOMO of seeing some of the pictures of my peers down there at this mastermind. But where they go and talk about one, growth mindset, but also industry, if it's multifamily directed, focused. But I think getting in front of people who, you are the average of the 5 people you hang out with the most, but being around other people with growth mindset, but also that had success, have been in this market industry longer, so I can pick their brain. I have a group, the mentorship group I joined in. There's a smaller group within that we have calls every 2 weeks, and it's great. Sometimes I'm like, man, these are guys that have owned 2, 3, 4 times as long as I have. So being able to hear them or come from a blending background, development background. So just having these guys that have had, there's knowledge and then there's wisdom type knowledge. And these guys have that wisdom, experience, knowledge that you don't get just from reading a book and implement. They've lived through different downturns. And so I feel, just blessed at times to sit and chat with those guys, or sometimes listen to them chat among themselves. I'm scribbling notes down going, I got to do this, something I want to do on my properties. But I think getting around other successful people that help with your growth mindset and with your functional mindset of owning the property.
Absolutely. It's so interesting. We have these mirror neurons within our brain, within literally the biology of our brain, and it wants to regulate based on what we see around us, because there's this innate need to belong to a tribe. And when we're intentional about who we're spending our time with, there's literally biology that's regulating us to be more like the people that are around us. So as we are aware of that, then we can start to be intentional about who are we spending our time with. One of the things that you've mentioned a few times is growth mindset. And, I'd love to really kind of dive into that just briefly before we transition to the rapid fire section of the podcast, because, you've mentioned that a few times. But first of all, I'd love to know what exactly does growth mindset mean to you? And then what does it actually do for you? Talk to me a little bit about that.
I think the definition would be that you can always improve. You're never at the peak. of something, even an athlete, we just had the Super Bowl recently that, there are guys in there that are, some of the top athletes in the world, but they still keep working out. They still keep going to the gym, running, working on their nutrition. We as entrepreneurs, we need to be surrounding our people that are going to stretch us, that aren't the crabs trying to pull us back down in the bucket. So somebody is saying, no, you can do more, you can push more, or you're seeing their success going, I'm going to, I can do what they're doing. So it's not just settling for where you're at. You're expanding and growing. So and I think the second part was, what am I doing to get that? It's reading books. I love reading. It's being with other people, joining masterminds or mentorship groups that will push you. Having my shoulder surgery done, that was weird. I'm mirrored, so I felt like I was reaching at the wrong side. Doing things that to improve yourself physically, spiritually, mentally, and that's I'm part of a workout group that meets at 5:30. They do it 6 days a week. And it's outside no matter what. And that I'm missing it right now, but that's a good group of guys that pushes to do something hard every morning. And then, holding myself accountable for some of these goals, setting goals to say you may not get them, but putting goals that they're stretch, they're going to push you. And if you can get 90% there, you've still done pretty well. I'm not going to, or if you only get 50% there, you've still made some progress forward. But the mindset needs to be, I've got these goals. I want to look at it on a regular basis. And it comes back to that mirror. You talk about also the reticular activating system, that what you get in your mind is what you're going to see and focus on. So where your focus is your energy is going to go where your focus goes. That's one of the big things is focus on these things of like, oh, the market's bad, lending's hard, capital raising's hard. Well, if you sit there and you kind of ruminate on that, you're going to move that direction. You say, hey, there's challenges. Let's look at what's right in front of us. What can we change? And let's change that thing. Let's focus on that little small step and move forward.
Absolutely. And this shift from growth to fixed, from the fixed mindset of, well, I made a mistake, so I'm a failure and I can never do this. And I just can't go where these people on these podcasts are going. The growth mindset says, I currently have this problem, but there's gifts within this problem. And I receive those gifts when I work towards finding the solution. And I'm of the belief that all human beings were designed to go big. And there's always another level. If you look at somebody, maybe some of your mentors, people who have been in the business for 4 times as long as you have, the people that you look up and you say, man, there's this unbelievable innate wisdom that they've gained over the years. There's another level for them. There's another level for everybody that you admire. And there are so many additional levels for ourselves. And by the way, I think one of the foundations to living a fulfilling life is expanding through that growth and finding comfort in being uncomfortable. So I just really love those shares, Nic. I want to transition to the rapid fire section of the podcast. It's called the Rare Air Questionnaire. It's all about being uncommon. In many aspects, I'd love to see this growth mindset become even more common. I think we're starting to see more momentum around it, which is very, very exciting. But I'd love to ask you a few questions before we wrap today. You mentioned one of the things that you are doing to invest in that growth mindset is reading. So talk to me a little bit about maybe 2 or 3 of the most impactful books you've read over the past few years and why.
Definitely Rich Dad Poor Dad, as we mentioned earlier. And then I've just recently finished Ed Mylett's Just One More. I think I got that right. That was a great book on how to push. I loved David Coggins, You Can't Hurt Me, just seeing what that guy could do. And then just finished a book. I'd actually read it a second time called Endurance about Ernest Shackleton, Shackelford, the guy that was trying to be the first person to go across the South Pole, but their ship got locked in ice. They spent almost 2 years adrift on ice and then sailed through the Drake Passage, which is one of the roughest bits of ocean in the world, in a 22-foot boat. It's just that, and it's just crazy. And anytime you think, oh, I'm cold, these guys, I think the warmest it ever got in the year, almost 2 years, was 37 degrees. That was in the summer of the time. So these guys are living in tents it was right around World War I. But it's just, do you think you're doing something hard? I'm like, man, our challenges are minuscule compared to living for, a year and 3/4 in a tent in the Arctic, Antarctic, and then selling this tiny little boat to hit a little small island. It's insane. So that was a great book. It's a new mindset. I try to mix in a history or a biography or something like that of people that have had challenges. I think I've got start with a why. I can see it back there. I've got that on my to-do, but the who, not the how was a good one that I recently read. Also, The Gap and the Gain. Those are the same.
And we just had Ben Hardy on the podcast.
Oh, cool.
Talking about both of those books. And yeah, those are amazing books, but great shares. And, talking about biographies, I mean, that can be extremely helpful in your journey as well, just to see, what challenges other people that you admire throughout history have overcome. I mean, I'm reading John D. Rockefeller's biography. It's called Titan right now, and it's amazing. I mean, you want to talk about scale. That is an individual who scaled beyond in many of our wildest dreams, but there's so much context there. But we'll put links in the show notes as where the listeners can find those books. And by the way, the book that you shared about the guys living in the extreme cold temperatures and doing what they did in Drake's Passage, I mean, that can shift the way that you think about challenges. So, conditioning your mind in this capacity to say, you know what, if they did it, I can. That's a very, very helpful context. I'd love to ask you, if you were to point to the biggest way that you elevate your life on a daily basis, what would that be and why?
One of the things, I've tried a cold plunge every day. I haven't been able to do it for my shoulder surgery, but that's one of those. Sitting down in 50-degree water is a mindset shift to get your brain to do it. And then staying in that water for 20 minutes is another long time. That's something that comes in one of those. Once I've done that, I'm like, all right, whatever. There's nothing else that's going to be that much more challenging. And then I think consistent exercise or physical activity too. And I'll throw a third, and I need to be better about this, is having some type of spiritual, I need to be, as a Christian, need to be in the word more. But if somebody else has another way, but having some way of just a meditation or something like that, I think is important for people. But right now, just to get my mindset, it's reading each day, doing those things like I said, talked about with Jesse Itzler's, picking 2 or 3 things that I want to do on a consistent basis to kind of take care of myself first, and not in a selfish way, but I think it's kind of putting the oxygen mask on in the airplane. If I can do those things, it makes me a better father and a husband and a team member.
I agree. I call it selfish selflessness. And you've got to treat yourself first, invest in yourself first before you can really show up for the people that you care about and others around you. And that leads me to my next question, which is, what's the biggest way that you elevate others around you?
I think one is being positive. I mean, not overly cheesy positive, but try not to break people down, find their positive attributes and encourage. I try to, when I go on property for our on-site people, try to only encourage them, even if I see something, unless it's life or death. I see a problem, I'm going to go to the regional and say, this needs to be fixed. Because, those guys I think they get really nervous when we walk on the property as owners. They don't realize they still have that fixed middle-class mindset. Oh, these guys are ultra wealthy, It's successful. Like, no, we're regular people that are doing regular things. So I try to be really kind to them, but I think that's, and then educate people on the growth mindset. Try with my children to not be like, whoa, this bad thing happened. It's like, no, this thing happened to you. Let's find a solution and let's figure out how to move forward with it, and know that you can grow from it. You may have got knocked back a step or two, but your decision is going to be to wallow in it and not improve, or you can be stronger from it.
I love it. Nic, this is awesome. And I just want to acknowledge you for, paying it forward with this growth mindset and leading other people in that, because I think that's really what it's going to take for us to see a transformation across the world, is for each and every single one of us to live by example and to lead by example. And I want to acknowledge you for that. I want to acknowledge you for continuing to challenge yourself and push your own limits and continue to expand within this business, personally, professionally, so on and so forth, as well as a father and as a spiritual individual yourself. Man, this has been a lot of fun. Do you have any parting thoughts or words of wisdom that you'd like to share with Elevate Nation today?
No, first, thanks for having me on. I've really enjoyed it, Tyler. Something that just light bulb turn on is talking about failure too. Failure's not a bad thing. I think society forever was, you don't fail a test, don't fail. And I start with my kids and with our team. It's like, we're going to take chances. Let's don't blow something up, but failure's okay, and we want to celebrate failure. And you go back to the greatest inventors. Edison failed at the light bulb the filament 10,000 times or something like that. But it's if you're trying and you're failing, I think is a great thing. It's when you're not trying, you're not growing. And yeah, you can go through life and never fail, but you're going to stay right in a very narrow lane to do that. So get out of your lanes a little bit, try something different, and fail at it. Don't lay down, stay down. Get up, dust yourself off, look at what could you have done different, where can you pivot and do, try it again with something different.
Man, that's awesome. And it reminds me of the quote that failure is not fatal. And by the way, success is not final. So, you can never rest in your laurels, but you can always look at every day as an opportunity to grow, whether it's a failure, whether it's a success, because there's always another level. Nic, what an amazing conversation today. Thank you so much for being a part of the podcast. Where can the listeners find you and learn more about what you do?
So you're welcome, and I appreciate you having me on. But my website is Thrive Multifamily, THRIVE Multifamily. And then through there, you could, there is a link to access a Calendly. We could set up a call, or my email is Nic@thrivemultifamily.com. Now, Nic does not have a K. It's just NIC.
Nic Espanet, again, thank you so much for being on the podcast. We'll put links in the show notes. This is where the listeners can find you. And until next time, my friend, thanks again for being on Elevate.
Appreciate it. Thanks for having me.
Elevate Nation, what a great conversation with Nic Espanet. And I just want to thank him so much for sharing really so much behind the scenes in terms of decision-making within the business, and also behind the scenes in terms of the way he's thinking. And I love just the basis of the growth mindset that he has really forged in his life, because there's such a shift. And no matter what you go through, there's a gift. And by the way, am I a poet? I don't know. Maybe I'm rhyming here. I'm talking about shifts and gifts, and who knows? I'm like Dr. Seuss on the microphone here today. But I just want to, I just wanted to highlight that, because at the end of the day, the growth mindset is the foundation towards our expansion in our lifestyle and the way that we're leaving an impact for other people around us. Because, if we're fixed, then, if we try, we will fail. And, if we fail, then, we're a failure. But guess what? There is always an opportunity to grow. There's always an opportunity to expand. So I just want to I want you to identify, what are your top 3 takeaways from this episode? There's many for me, whether it's in the tactics of the business, whether it's, recognizing the KPIs and paying attention to the pulse of your portfolio and really keeping your focus on that and making changes within the operations of your business, your decisions based on where things are trending and turning around that cruise liner ship, to the positive direction. Those are some takeaways, but what are yours? What are the biggest takeaways that you realized through this conversation? What was said or what was not said that you thought about as a result of listening to this conversation? Because those can be distinctions as well. And sometimes we've got to read between the lines to really understand, how can I integrate this learning and this wisdom into the way that I'm operating my business, the way that I'm living my life, the way that I'm making an impact on other people. There's so much value here. I want to encourage you to re-listen to this show, because repetition is the mother of all skill. And by the way, if you listen twice, you're going to learn twice as much or more. And I also want to encourage you and invite you to share this episode with a friend and have a conversation about what it was that you learned, what the distinctions that you took away from this episode were, and how you are making shifts in your business, how you are channeling the energy of solutions-oriented focus rather than problem orientation or rumination. And as you do that, take this forward and take the commitment, the challenge of taking massive action, because ultimately that's where the real success from investing in yourself today comes from, is about taking what you learned and integrating and applying, taking massive action. Until next time, Elevate Nation, thank you so much for tuning in, and we will see you next time.
Thank you for listening to Elevate. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to elevate your results by taking immediate action on what you learned. For more, visit elevatepod.com.